If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many, many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started now.
Welcome to the Money Vikings Podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings Podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
Find out what fruit trees and dividend stocks have in common. Passive income, one of the secrets of the wealthy. Join us as we discuss dividend-focused style investing with a very special guest and new Viking, Mr. Matthew Ramey. Welcome to the Money Vikings Podcast, number 43, everyone. Bob, Jerry, Matt, are you there?
We are here.
Welcome
back. Dividends and fruit trees, man. Let's
Okay.
God,
So I'll get to that. So Matt, our grandfather always used to say, and I think you will appreciate this as a dividend guy, that you should never chop down the fruit tree, right?
It's good.
I
like it.
Mind blown.
I'm not quite getting the connection there.
Okay, it means you let.
I'm kidding.
Come on. I quit.
All right. Hey, so I got to say up front, as everybody knows, we got a really special guest today with Matt Ramey. Very excited about this podcast. Love his blog, love his books even more. They're really good books, so go out and buy them. They will definitely give you a lot of help with budgeting and with fundamentals of dividends, which we're going to get into. But got to say up front, as we always do, nothing on the show is personal investment advice. This is for entertainment purposes only and informational purposes only. So please do your due diligence. Please go out and get a fiduciary financial professional. I'll leave it at that. Matt, welcome to the show. Can you tell us a little bit about how you got started with your awesome blog and dividend investing?
Hey guys, well, hey, thanks for having me. Really appreciate being on here. Been following you guys for a while. Really appreciate what you do. So it's an honor to be on here. But yeah, I guess just a little bit about me. I've always had a passion for finance and money. I dabbled in the markets at an early age, but I kind of did the thing where I did the passive. You buy into an ETF or a mutual fund, and you kind of just, I have a really hands-off approach. But really, I kind of looked at that, and my end goal with that philosophy was to build up a big portfolio to sell it down the road. Which it gets back to, don't cut down the fruit tree. I wanted to start,
planting an orchard.
Yeah, exactly. I wanted to start with that orchard. So that's what kind of got me involved in dividends. I've been passionate about that, but also just passive income in general, financial freedom. So, people, around me they always ask me for, financial opinions, money advice, things like that. So I kind of just said, hey, let's maybe start up a blog about this. And that's kind of what I've been doing for the last couple of years. It's been a blast.
Cool.
I love the blog, and you can follow Matt's orchard, I'll call it. Because he posts every month. You have a really cool graphic that shows your positions that paid a dividend each month. And I really enjoy that. I go in there quite a bit. Really, and it'll tell you like, oh, my Realty Income provided, it's monthly, $25.93 in dividends. And then my Pepsi is over here and my Pfizer. So I do like that. I want to find out how you built that at some point.
For sure. Yeah, I was just gonna say, I know it's through Canva. I actually can't, or Canva, whatever it's called. I can't take the credit for it. My VA actually does that.
I love it.
It's something where it's great putting those graphics out there. I think it really, at least in my mind, it makes investing real to a lot of people, because you can see, you're getting money from owning these great companies around the world. And I think that graphic just does a great job at displaying it.
A lot of people, they're just visually, it's quick digestive information, right? It's how quickly they can actually process and digest it. And I think that speaks volumes to people.
Yeah,
so
sure.
it's great. And so when you are you just solely running off dividend reinvestment right now? It's just the gears in the machine are just cranking away, or do you kind of diversify out? Like, are you doing?
So yeah, I mean, my bread and butter is dividends. I mean, that's where, I have a book, Simple Investing, which you guys had mentioned before. Mm-hmm. That's where I kind of write about the dividend investing strategy. I've been doing that for probably the last 10 or 15 years. But I mean, I'm a big believer in diversification. So for me, like, I have other investments. I do peer-to-peer lending. I do some real estate crowdfunding. I guess I just try to find ways. I try to make as much money as I can, first off. And then I try to, find ways to put that in things that are going to be generating passive income for me.
That's awesome.
I'm not living off that yet, and I'm plowing all my dividends back in reinvestments.
Yeah.
But again, I'm always looking for new passive income streams.
Yeah.
That's where it's at.
So just starting somewhere, right?
Exactly. And one of the things I like to tell folks who are building wealth and looking to be, free from the typical hamster, rat race that we can be in, is that, and we talk a lot about it on our blog as well, is we call them passive income machines.
Yes.
Right. So I personally utilize real estate, like real estate investment trusts, and then the dividend stocks. But what I really like about dividend stocks is that folks that are new to investing, or even not new, but so I do have some private real estate investments, but those are very hard to set up, right? You got to put a lot of capital work. You got to do a lot of sweat equity most of the time. You have to be involved with tenants and with leases and negotiations. You can literally buy a basket of high quality dividend aristocrats, and you're getting passive income. I'll exaggerate a little bit, instantly. But, when that next payout's coming, you have so anybody in the US, I mean, if you have the fundamentals down of like a solid employment and, you have like your basics covered, anybody in the world can basically build passive income right away. Go ahead.
And you don't have to mess with the 3 T's, right?
Tenants,
toilets, and toddlers.
I didn't have the toddler one down, but it's a good one too, because I've gone down the toddler route, and there's a lot of when you have kids, good luck trying to keep your house, and property in good shape. So, but you're absolutely right. There's none of that involved. You have to mind your investments like Matt does, and you have to keep an eye on them and do your due diligence, like he talks a lot about in his books and his blog. But beyond that, it's actually pretty easy. I do have a statistic here I want to throw you guys' way and see what your thought about this. In some of my research for the show, I found that from 1930 to 2020, so a long span within the market, dividend income contributions to the total return of the S&P 500 index averaged 41%.
Jeez.
Yeah, I think that's a fact. I don't know, Matt, do you know anything about kind of that? But I think that people, my point is, I think people underestimate the amount of returns. The dividends might seem small to folks, but when you have those churning back into the investment and compounding, I think we all know that's when the magic happens, right?
Yeah, well, and that's where, when I was starting early on, I mean, that's what I've heard referred to as a snowball effect. And I remember actually when I first started, I think the figure was $566.80. That's the amount of dividend income I was getting per year. And I was kind of looking at that and I'm like, man, this is small. Like, I'm never going to be able to live off that. But then, I look like, a couple of years down the road, I'm near 10,000. And, to your point, the portfolio, it's involved in that principle of compound interest. Because every time, I'm not getting interest, I'm getting dividends. But every time I get those dividends, that's plowed back into those positions. My positions increase. Then that means my dividends from that position increase. And it's just kind of a runaway snowball effect. And part of, really what got me excited about this is you guys have probably heard of the book, The Intelligent Investor by Ben Graham.
Mm-hmm.
Sure. Oh, absolutely. I'm a Papa Buffett and monkey pants right here. Yeah.
Monkey pants. Monkey from down under. Yep.
Monkey pants. I like it. I was going to say, I know in that book, obviously Warren Buffett bases a lot of his investment strategy around that. But I mean, I started to look at Warren Buffett's portfolio, and he really buys into a lot of companies that pay a steady stream of income, whether or not it's insurers or companies like Coke, Kraft Heinz, that, they start kicking out a dividend to them. And I just think there's so much wisdom in that, and, buying into a solid company and then being able to get that income from it as well.
Well, you bring up an awesome point too. You reminded me of something. So I noticed during this last, we've been investing long enough that we've gone through quite a few. We talk about this in the show. Like we've gone through quite a few strange sort of existential phenomenon, like the .com bust, the great housing recession, 9/11 type things, and then now this pandemic. And so if you think about it, during all those times, if you took that portfolio that you have on your site, I bet your portfolio during this last pandemic slump, if you had those dividends being continually going in and the dividends weren't cut, you were buying a lot more shares of, your realty income. Realty income got hit pretty hard at first. It's bounced back, right?
Mm-hmm.
But it was buying a lot more shares for a while, right?
Oh, definitely. And that's part of the beauty. To me, that's part of the beauty of the strategy is you kind of, to your point, markets are always going to go up, always going to go down. I mean, I guess if you only know investing for the last, 2 years or so, you probably think they're only going to go up.
I was going to say the last year, markets only go up, guys. What are you talking about? Don't tell anybody that.
But, you guys have been investing a lot. I mean, I went through that .com bust, the housing crisis, the COVID crisis. I picked up some great positions there when I picked up a couple banks and kind of financial companies. Everybody thought they were going to go under. Pandemic was going to crater everything, and now here they are. I mean, I think higher than before. I was getting dividends all along. I mean, some of them I think cut a little bit, but then they came back. But to your point, I mean, if this dividend remains stable, you're buying more of the same great companies, just now at lower prices.
Absolutely.
See, the thing is that will admit I'm not the biggest of the dividend
we're working on it, Matt.
Dabbling person in this group, because I think where I come from is I am more of that OTC diamond in the rough, stock that you can play. I do a lot of the swing and day trading and whatnot. So, but I know I will get to a point where I just don't want to participate in that way anymore because it can be stressful. I'm not gonna lie, right? You have those days where it's like, sorry, I don't want to lose $1 million in a day and think like that's the norm. But it's like to be able to sit there and just put it into a dividend aristocrat or something that's going to just churn and burn and recycle itself and not have to worry about it anymore really is appealing. I'm not gonna lie. So it's for me, it's like it's hard for me to get fully invested and down that path of doing dividends now when I feel like I'm having so much success the way I'm doing it. So how would I would say, Matt, how would you sell me on it, man?
Well, hey, I mean, you bring up a good point. I mean, there's the way that I look at it. I'm not, a total dividend acolyte. Everybody has to invest that way. I mean, it's not right for everybody. I mean, there's a ton of different ways to invest. I mean, I implement a lot of different strategies in my own walk of life. I know a lot of people that are, only grow stocks like that. That's their bread and butter. I know, somebody that day trades. I mean, if that's what you're good at, kind of know how to identify those opportunities. I mean, more power to you. I just know for myself, you made the good point. I mean, my portfolio is largely set it and forget it. Right. And for me, I'm doing so much in my day-to-day life. And, I want to spend as much time as I can with friends, family, hobbies, and things like that. I mean, I don't want to be, spending my other waking hours kind of doing some, day trading behind the scenes. But again, there's a ton of different ways to make money. And if that's the way that somebody wants to do it, through a different trading strategy, again, more power to them,
You actually just touched it. And I think that's the big thing is we talk about this all the time is it's the quality of life, right? And I think this indoctrination that people have into thinking that they need to just work a 9-to-5 job, you're going to work your way up the ranks and that's where you need to be to get to retirement. It's like, well, let's start actually educating people and what methods can we get somebody to a point in life where they're actually enjoying life, enjoying relationships and people and traveling experiences, like these things. And so good. Okay. I'm on board with you.
Yeah, I like both of the techniques, actually. I sort of have a schizophrenic investing way of going. I mean, I love the long-term dividends. I like the 401k, and I pick stocks and ETFs. Dividends are not my only choice, but I do love to play options. And when I talk about playing options, it's not so much buying calls, or it's a very different type. It's selling. and I pay attention to the Greeks, and one of my favorite Greeks is Theta. Theta is the amount of money that you get every day when you're selling options that you are paid for time decay. Yeah. And I'm just looking at, I have a small portfolio right now, but the Theta decay is 27. That means every day of the year, whether we're trading or not, I am getting $27 in my pocket if nothing changes. So that's kind of like a dividend from an option in some ways. And you do the math, it adds up pretty fast for a year. 27 times 365, do it. And it's not bad.
There you go.
Yeah, and Jerry, you taught me a lot about the covered calls as a synthetic dividend. I mean, that's another way of
one of my favorite ways to play it is find a dividend paying stock, buy it before the ex-dividend date, also sell a call against it at the same time. So you're kind of double dipping, and you're getting the Theta decay and the premium from the option, and you're getting the dividend as well.
Wow.
Doesn't always work that way, but that'll be
my mind's blown right now, Greg.
Since we're walking on the wild side here, so Matt, you mentioned in your blog that I've noticed when I was doing a deep dive in your blog, you do some crypto. So you're not all, you mentioned it. You're not all dividends. What crypto do you do? Just curious.
So, I own a small amount of Bitcoin. I think Bitcoin has a lot of potential. I'm not sure. I don't know if the governments around the world will allow that to kind of become the actual currency. I'm actually a little bit more excited about Ether. I kind of feel like
thank you.
Yeah, so I
talking my game.
Yeah, I have
I'm a Bitcoin maximalist. Sorry, man. We can't talk anymore.
Hey, listen, on Ether, guys. Are you guys following this thing with the Ether upgrade for August, where they're going to display some cones, some coins? Okay, currently users bid to have their transactions verified, right, by the miners, but under the change, technically known as Ethereum Improvement Protocol 1559, right, users will pay more predictable fees. And the most exciting part about this, I think, is that they're going to be burning a bunch of coins, so destroying a bunch of coins, right, which should make the value go up.
Yeah, so as a miner, I'm mining Ethereum right now, and as a miner, I hate that. But as a Ethereum investor, I love it.
Wow.
Interesting.
It's interesting, Matt. I'd love to hear your take on some of the staking because, I put some Ether into Coinbase, and they are offering right now 5.5% just to keep your Ether staked there with them.
Wait, hold on. He didn't finish telling us all the coins he's in, guys. You guys got all hyped up on Ethereum here. Let's
Sorry,
boys.
Okay, I gotta stop drooling.
Spray water on you or something.
I was gonna say I got you guys.
Jeez, man. He didn't even tell you about his position in Dogecoin. So let's slow down.
Ether is my biggest position. I don't know if you guys have ever heard of Nano, but I have a small position in Nano. Other than that, I did want to dabble in Dogecoin, but I was on a Binance exchange and I couldn't get it set up quick enough. So I kind of missed some of those plays. I thought it'd be kind of fun to get in that, see what happens. But then again, I'm a pretty conservative investor. So sometimes I kind of feel like, with that type of thing, you might be throwing money at, doing a lot of highly speculative investing there.
I figure you throw $100 or something and you get like 1 million coins out of it. And then you just, just forget 10 years down the road, it's like $5. It's,
Exactly.
We're the same way, Matt. We have probably the majority of our investments are conservative things, but then like Jerry was saying, Bob really does well with the OTC stocks, the penny stocks, which I'm actually starting to get a real taste for. We had a great interview with the Penny Queen and with Brian over at Gator Traders, and those guys will blow your mind. That's my catchphrase. But it's just awesome. So like you said, lots of ways to make money, and portfolios can be dynamic things made up of a bunch of different things. We don't all have to do one thing, right? That's the beauty of it. We can do different things. We're trying to put our capital to work. I really like the 5 keys that you outlined in your book. And I wanted to just get you to kind of talk about them a little bit. But number one, you'd said, you look at yourself as an owner when you're investing in these stocks. You think of it, income is king. You say the dividend payment is all there is. Diversifying is your friend, and you're in for the long haul. So, You know, I guess they're pretty straightforward things, but we lose sight of fundamentals, right, over time. But go ahead. It sounds like you are able to stick to that pretty consistently.
Yeah, well, and I mean, I think it's all kind of based around principle number one, that you're an owner. I mean, I think some people, when they're investing in stocks, they kind of look at it as, I'm buying this, thing that, the maybe piece of paper, electronic blip that's going to be going up and down.
Sorry, guys. I think I have a kid screaming in the background.
That's
here.
okay.
Sorry about that.
Flavor to the show. Okay, guys, we have kids. It's good. Keep going, Matt.
I thought the water was boiling.
But in case, you're the owner principle kind of just goes in to show that, stock market, I think, is one of the greatest inventions of all time, that it lets, anybody out there own, a piece of Apple or a piece of, Pepsi, Coke, whatever type of company it is. And so I think if people kind of remember that, and, as long as these companies, I know you mentioned the fundamentals. I mean, a lot of these big companies, I think are going to be existing as long as you're doing your homework. You got to keep following them, but you just kind of want to have that ownership mentality. This is a company that I want to own for the long haul. And then kind of once you get to that point, I mean, that's where, for me, the income that you can produce from that, I mean, obviously there's gains that you're going to get on your position. But for me, it's like the reason why I highlight that the dividend payment is all there is. And to me, that kind of takes the emotion out of investing. Like I've had huge swings in my portfolio where, I mean, I'm losing, 20, 30,000, 40,000 a day just in gains. And if I'm, worried about, oh my gosh, I have all these paper losses, I mean, I'm going to freak out. And that's why I try to stay focused on dividend income.
That's a nice car, dude.
Yeah,
nice
exactly.
Right.
Well, and I wanted to ask you, staying on that point for a minute, I noticed in your portfolio, I mean, you have things like Exxon and AT&T. I've been owners of both of those at different times. I got to admit, those have freaked me out a little bit the last couple of years. And you didn't, I mean, those didn't freak you out? You were able to weather the storm, or you cut positions?
Yeah, I mean, Exxon, I guess, I kind of made a play in the oil majors when they were pretty low. I kind of thought it would be something that could rebound, and they have rebound, but there's obviously a lot of cause for concern there. I actually have, that's one of the positions that I have as on a cash dividend. I'm actually not reinvesting that at the moment. So they're kicking dividends to me. I might put it in other positions. Oil long-term, I don't think, I don't think it's going to be around, but I think we'll probably still need it for, a little while. But my hope in having kind of some of those small positions kicking me cash is that, Exxon can kind of figure out a way to kind of transition to whatever that new power source is going to be. So obviously I'm watching that one a little bit closer. AT&T, I was disappointed that they were going to cut their dividend. I mean, I know they made some pretty terrible investments and, DirecTV and, even Time Warner, you got to kind of question that. So they took on way too much debt. And, I thought their cash flow could sustain them. With that being said, they're still kind of kicking out a little bit of a dividend. But I'm, to your point, I'm watching that one closely.
Okay.
Yeah.
See,
I mean, I had a real hardcore analysis of AT&T because one of their holdings is the Batman franchise. And so I was basically all in on that. But anyway, I'm a technical investor. What can I say? So, go ahead,
okay. So Matt, I got to say, you talk about oil. So whenever you get a chance, you got to check out Cielo Waste Solutions. There's somebody who is taking plastic and even contaminated plastic. They are finding a way to break it down and create biodiesel fuel out of it. Yeah, and it's non-polluting. So
this is one of those OTC plays. That looks intriguing.
CWS FF. They're so if you're that oil kind of direction, this is kind of a branch of that. Check them out.
What kind of dividends do they pay?
Free $99 a month. You're welcome.
Right. I really liked from your book the 7-point dividend checklist, and that was helpful when I started analyzing some of my dividend holdings, which I actually updated on the blog yesterday. My dividend portfolio, so people can see my dividend holdings right there. Without going through all of them in great detail, Matt, I mean, we can mention them, but maybe if you want to hone in on like the most important two, if there are two that are the most important to you of your 7.
Yeah. And I mean, I guess I was going to hone in on three real quick here, just because the first one to me, I think, is really important. The company has a moat. That's something that I know that I think it was Michael Porter's Five Forces analysis kind of always talked about that. But I think it's something that Buffett also mentions is what can this company do that no one else can replicate? And if you kind of look at, one of the companies that I own is Apple. And, they pay a smaller dividend. It's kind of one of my, they still pay a dividend, but it's a little bit of a growth play as but you look at what they do. I mean, they have an environment that's enclosed that people love their product. I mean, that's very, very hard to replicate. And so when you kind of look at their moat, I mean, that's, I always envision it as like, Apple in a castle and, if other companies,
I call it, you can't get out of the Death Star grip.
Yeah, it's true. It is true.
I like that one.
Yeah. Well, I mean, I'm a big Apple fan. I'm with it.
Yeah. No, I think that's really important. The other two, one of them is increasing revenues. I always I know a lot of people might want to look at the bottom line, like, hey, how's this company doing from a net income perspective? But you guys know, I mean, if you're not increasing revenues, you can still cut costs and have a pretty decent, net income, but you can only do that for so long. So you need to be able to, grow those revenues, be in a growing industry, because if you're not growing, you're dying. So that's something that I'm kind of looking at in all my companies is, what's the trend? Is it up, increasing revenues? If it's decreasing, that's going to be they're going to hit challenging times, in my opinion.
Yeah.
That's a good one.
Yep. And then the last one, I love seeing free cash flow, like positive free cash flow. It covers dividends, covers interest expense. Because to me, getting back to the net income, I mean, you can manipulate that or, adjust it through accruals or, various accounting measures. Whereas I think the cash flow is kind of more of a pure metric, like how much cash is this company making? So I really like to focus in on that and, kind of have that as one of my big metrics that I'm looking at.
Okay, so we don't give investing advice on the show, but if you were to give me investing advice, and I was a business person and you were a financial fiduciary professional, what would you say would be the top three that you're doing right now?
Or Matt, you gotta say, you personally, what would you do in this situation?
Yes, that's true.
I were you. There we go.
What would you do? Basically, what dividend stocks are you looking at right now that you think are either great value or just appropriate for the market we're in? I mean, because a lot of talk that assets are pretty healthily valued at the moment, right? We're pretty robust valuations among the broader market. Real estate, everything seems pretty high at the moment. Doesn't seem like a lot of maybe things are about right. Maybe there's a little bit of bumpiness down the road with some third wave of pandemic. Who knows? So what would you be looking at now?
Well, it's interesting you guys are mentioning that because that's something I've been thinking. And I guess I'll kind of back this up a little bit, that when COVID first hit and markets were, crashing, I did a lot of investing. I had a lot of cash that was ready to go. I put a good chunk of it to work, but I held back some. So I've been having a pretty good cash position still for the last, couple months. And really what I've been doing, my personal strategy has been kind of layering into some of the bigger companies. Like I love, Microsoft, J&J, Coke. I do like putting money into Coke, though, I'm a little concerned about some health trends with them. So I'm always watching that a little bit closer. But that's kind of what I've been personally doing is buying into what I would say is maybe more stable companies, a place to kind of put my cash that will pay me some sort of dividend. Cause interest rates are pretty low. And to me, that's what I'm kind of doing is hedging. Cause I think the interesting thing that I think I personally am potentially seeing happening is that either we have a market crash because to your point, things are really overvalued. I do think that there is, some issues with that. But then I also listen to this other podcast. I forget the name off the top of my head, but they're really good at what they do. But they always talk about a melt up. Like there could be a melt up. So things go even higher, kind of as So to me, it's kind of a hedge to say, let's put my cash here, so that if things go down, I'm not going to lose as much. But if things, I don't want to miss out on market gains either. So that's kind of what I've been doing.
Mm-hmm. Hey, J&J, longtime J&J holder here. J&J, in my mind, is the premier dividend stock. I can't say anything bad about J&J in terms of an investment. It's high. You're not getting a great value discount. It's not on sale, but that thing is going to keep chugging for quite a while.
But there are some dividends out there that people want to shy away from, right? I mean, isn't there? If I remember correctly, there's some low quality dividends, or somebody's paying a really high dividend out in comparison to the stock price.
The dividend trap. Right?
So I mean, and Matt can probably expand on this. I mean, my understanding, you want to be a little bit careful. I do go for some of them, but when the yield is really, really high, that typically is considered a red flag, that there's kind of maybe something underlyingly wrong with the company, and you wonder if they can sustain that yield. Like something's off about the dividend payment versus the valuation of the actual equity. So those I always kind of look at with a bit of like a kind of a, critical eye. And I do go for a couple that have really high yields. But I tend to think of them as a little more speculative.
Yeah, no, for sure. Well, and I kind of call that chasing yield. You're not really investing in a solid company in that case. You're basically just saying, hey, I can get a pretty high payment. But to your point, usually there's a reason for that the market is pushing the share price down because they just think it's not a very good stock. And I know some people. There was one guy that I followed who is like I think nearly all like fracking companies that paid a dividend.
Wow.
And I mean, and it was so risky. I'm sitting there looking at this thing. I'm like, you're gonna lose all your money. But he spent, his whole career was in energy. He said that he knew energy. That's why he did it. And but to me, it's like I look at something like that, and that guy's chasing yield.
Because the reality is, right, the share price is just going to start tanking down, and it's not going to be worth the yield you're going to get out of it ultimately, right?
Correct.
Never know.
Yeah.
You mentioned in the book that living solely off dividend challenging road, right? For most of which I agree. I mean, it takes many years of building quite a substantial portfolio to actually be able to live off of them. But financial freedom is typically a multi-legged stool. You're looking for various passive income machines and sources of income, and this could be withdrawing from the 401k, the dividend pot. Rental properties, maybe a pension, Social Security. I mean, people draw off of different sources. Can you talk a little bit about, where your journey's at on that whole spectrum?
Yeah, for sure. I mean, the last couple of years, I've really been hitting dividends hard in the sense that I've been, that's where a lot of my extra capital I have goes towards, just because. So I used to be a homeowner. I sold, I think it was 2 years ago. I thought, market was kind of pretty high in my region. I took a lot of that capital and put it to work. And so eventually, I want to get back into real estate, and like I have plans of maybe looking at buying some rental properties. Because to your point, I think diversification is the way to go. I mean, not only across, people talk about diversify your investment portfolio, which means, own some stocks, own some bonds, own different industries. But then I also think that, transcends to asset classes too. To your point, real estate's great. I think everybody should be invested in, maybe even a little bit of a speculative position in crypto. And there's just so many things out there that I just think it's good to have that diversification for sure.
Yeah.
What percent in crypto do you think is good for speculation? We've always had this debate, and I'm just kind of wondering where you fall on that one.
Man, I don't know if for myself, I don't really target a certain percentage. I mean, I'd say right now it's probably 1% crypto. I mean, it's a decent size, but it's 1%. Yeah. But for me, it's like what I'm doing is I actually buy a new position in Ether every month right now.
Nice. Okay.
So I'm buying more and more coins, but really to me, it kind of comes down to like the way I've looked at it is whatever money I think I can lose, like it's okay putting it into crypto. Cause it's all kind of a crapshoot at this point and a lot of speculation. So I think for a lot of people, it's like, don't put more money in there than you can afford to lose because it's highly speculative.
Good advice.
What about, and then what's your stance on kind of in buying power, like the dry powder? Like how do you play that?
You in cash?
Yeah.
Right now, cash is probably. The caveat is it really depends on what the market is, but I mean, right now I'm pretty low percentage cash because, like I said, I've been buying up a lot of J&J. That's kind of almost become my cash position. I mean, before it used to be more when interest rates were around 2% to 3% on a high yield money market, but now it's like I'm losing money to inflation.
Because and the thing is, the only reason why I throw that out there and ask is because I know the market as is right now, coming from the technical perspective, is that it is showing a lot of these strains and signs of a looming correction. And, it would be best interest to have that cash on hand, right? And be ready to find the opportunities when the bottom hits. So just to know where your stance is on that.
Yeah, no, for sure. And I mean, to your point, I'm always building up my cash position. Right now I'm kind of rebuilding it. I've kind of just deployed a decent amount of it, but now, my goal is rebuild it. And then when I'm finding values, that's when I'm investing. And, again, I haven't necessarily found great values recently, but, I've been finding enough where I'm kind of like, all right, I'll move out of my cash position, which is basically getting, negative interest rate on it, to, an equity position, which most likely will grow. If not, I'm getting dividends and, hopefully won't tank too much. But if it does, again, I feel like my strategy is, stay in the markets long term.
That's cool.
So talk to us a little bit, Matt, about how you do this part of it, because I think Jerry and I especially been kind of moving this way. I've been moving away over the last 6 months or so away from some individual stocks and more into ETFs, and especially dividend paying ones. And then there's a favorite one that Jerry and I joke around. DADX, which is the Vanguard Dividend Appreciation Fund. And I think we like it because I think we like it because it has the name Dad in it, basically. But not only that, if you look at the chart for VDADX, it's just this like beautiful, like constant.
It always goes up, dude.
Yeah, there was
low fees too. Low fees.
Low fees, right? Very low fees, and it did have a little dip during COVID, like everything. But if you look at the chart, it basically just went right back up and continued. I call it like the little engine that could. It's just like, I'm just going to keep going uphill. I'm just, there's nothing exciting about it. It's like a dad, okay? It's not sexy. There's nothing exciting about it. But the dad comes through, okay? The dad continues to go, okay? So Matt, talk to us about do you do any ETF like this? And, why, I don't know, what's your take on individual these ETFs?
Well, I think, ETFs, they're an amazing invention, mutual funds too, but obviously ETFs are a little bit lower, because they, track certain indices in the markets and things like that. But, I think ETFs are great for a lot of people. It's kind of the same principle where, you put money into that ETF, the Vanguard dividend appreciation. And then, it should be a set it and forget it. You put your money away, you kind of trust, the system, the markets to keep growing that. It does what it's supposed to do. I know for myself, I feel like I have a certain level where I can either replicate what's in those portfolios. If you look at a lot of them, they're holding, Microsoft, Apple, like some of the companies that, a good dividend portfolio will own. But again, it's hands off for a lot of people. I think it's a great place for people to put money if they don't want to spend the time doing their own dividend portfolio, picking their own stocks. I kind of like it. That's why I do it. I think it's fun. And, that's why I choose individually.
You're onto something, because when a lot of friends of mine will come to me, and this happens, and they'll be like, hey, we read your blog and we want to know what should I do next and what stocks. And I usually, if they're new to investing, I usually throw out a couple of ETFs, their way, and just say, hey, get your feel for that. Look at the basket of stocks in there. Do you like that basket of stocks? Do you think those are strong? They kind of, from there, maybe venture out. From there was another one I like that lately I've been getting into the SPHD Invesco High Dividend Low Volatility Index. It kind of had to do with that comment you made about the market right now and feeling a little bit like, I don't know where things are going. So I like this high dividend, low volatility concept.
I love the volatility.
Mm-hmm.
That's true.
Make me money volatility.
I sell I eat volatility for breakfast.
Yeah. I like that, Jerry.
That's how you make money, man.
No, I love it. That's why we look at everything. We do all this stuff.
Really do.
I actually, in all seriousness, I do like the Morningstar has this X-ray service, and they're not paying us. I wish they were, but you can put in all the ETFs that you own, and then it spits out what stocks you own out of those and shows you kind of the percentage. So if you ever feel like, it'd be really fun to own some Apple or some Amazon or whatever, and you don't actually own it in your portfolio,
you can see the total makeup of it in this nice report they give you. And I do that a couple times a year just to kind of see where I am. And that also helps me if I'm looking for a stock to buy. It's like, well, I got enough Apple. Maybe I don't need to buy more shares.
Well, do you think it's really? Do you think really it's just a hoax, and behind the scenes they automatically just kick out saying that you own Apple, Microsoft, Amazon?
I don't know. I think they might get in a
most
bit of
Americans do. Most Americans do.
I don't know. Yeah. Well,
every ETF has like one of those in there, one of the fangs.
Yeah,
like,
no, I mean, you don't have to even subscribe to Morningstar. Go to any, to your Vanguard or Fidelity. You can look in there and it'll show you the makeup. It's not as sexy or fun, but.
So Matt, at what point do you dividend stock?
For me, I mean, one of the things that, I'm looking at, obviously if you're seeing negative trends, that's something you want to analyze. But, if dividends cut, you got to really figure out why. And you guys brought up, AT&T before. I mean, again, that's one. It's actually my top dividend payer right now. And, obviously, I think they're going to have the dividend. I've been trying to find out what it's going to be. I'm not sure that they have that published yet. But they're going to cut it in half. And it's like, that's something that I got to look at. But again, before, I think they have pretty strong cash flow. But it obviously requires more analysis to figure out, hey, is this something I want to hold long term, or is this a pretty bad trend?
Interesting.
I'm a huge real estate nerd. So Reits, talk to us about Reits. What I see you have O on there, which is like my favorite. Little high now. But what other Reits are you looking at, or what's your take on Reits?
Well, it's interesting because somebody the other day kind of asked me that question because they're saying, they said, hey, you don't own too many REITs in your portfolio. And I mean, they're right. I mean, I've kind of stayed away in the sense that, I know that they pay out a ton of, dividends or ton of their cash flow and dividends, sometimes even more because they have certain stipulations where they need to pay that out. But with that being said, like, I guess another one of my caveats or issues has kind of been commercial real estate, because I think the pandemic has shown us that, people don't really need to be in an office to do work. So I think commercial could, I mean, we'll see how that trend goes. I know a lot of companies are they like people in the office, so they're swinging back, but I think there is kind of a little chink in the armor there for a lot of, commercial based REITs. But with that being said, like, I forget exactly who they have in their portfolio, but I think it's companies like Walgreens and CVS and things like that.
Walmart, 7-Eleven, they own like all the 7-Eleven locations. It's really well diversified. I've been lately looking at, so I did pretty well during the pandemic. I sold some of my positions and took some of the profit off the table, but Simon Property Group runs high-end malls. And, they said the mall was dead, and it's not dead. Around here is completely packed. You can't even find a parking place anymore. So malls are certainly not dead. I'm a big fan of Store Capital. I don't know if you know Store, but that's a Buffett REIT. That one's worth looking into. And my latest acquisition was Medical Properties Trust, MPW. And that's along the lines of what you're saying. You can definitely send knowledge workers home to work on computers, but you really can't do medical procedures.
Yes.
You really need to be on a hospital property.
Right.
So
or the back of your truck. I mean, whatever.
Well, depends on the procedure. That's right. Are you using dividends at the moment to pay any of your bills, or are you just in your accumulation and building phase?
I think I mentioned before, I have a few positions, some oil majors and one other company that's on cash dividends. But really, I mean, I'm using that to buy up more stocks. I mean, my goal, and I think, anybody that's just starting out, goal should be to, keep growing your skills, growing, where you're at, so you can make more and more active income that you're either, trading time or effort for, whether it's making a product or, hours at work, so you can kind of make more and more active income. So my goal, like, I'm actively working right now. I do a lot of contract work. I have a consulting business that I run a lot of that through. So, I'm making, good enough money there, and, again, socking a bunch away into cash or dividend. So all those dividend positions are on reinvestment at the moment. So they're, growing, that snowball effect in action.
That's good.
Very cool.
Yeah.
Now we've got earnings coming up next week. There's a lot of financials. We've got JP Morgan. We've got Goldman Sachs. There's even Bank of America, Citi, and Delta Airlines, which I see you have some shares in, and they suspended a dividend. Any thoughts on either the financial or airlines industry and how things are going to be next week?
Yeah, that's interesting. I guess I haven't even really, thought about that. I do think, financials are I don't know. I wouldn't be surprised to see them up. I mean, obviously if Fed ends up increasing rates, that's a positive for them. I mean, I've been hearing kind of some inklings that might happen. Obviously that wouldn't be reflected in their latest financials, but airline industry seems like it's in recovery. Again, I don't know if we'll see that necessarily in the newest Delta earnings, but again, that's where I'm just kind of hopeful for, long term. I want to, see us, keep getting back to recovery and keep seeing these companies grow. So
yeah. So you're still holding on to Delta though for a while, huh?
Yeah, I'm kind of eventually they'll reinstate their earnings, but or reinstate the
dividends. Yeah.
But even if they don't, I mean, I still feel like if I fly, my main choice is Delta. So I feel like if I'm still holding a great company, I mean, I didn't want to sell them when, they were getting beat up because of COVID. I mean, I want to keep holding them long-term because I, believe in the company.
Cool.
Very
I
cool.
think wasn't Delta the one? I can't remember the airline. Delta was one of the airlines that does really well during recessions and whatnot. They kind of. Am I thinking it is Delta or American? I can't remember.
Delta.
Well, I mean, a lot of cheap shares during things like pandemics and 9/11 type events, and they're great investments.
Right. They're still pretty cheap. I got kind of actually stuck in Delta. I didn't intend to hold it this long, but I've been in Delta a couple of years because I was doing covered calls, and then it just it went so low when the pandemic hit that those just I wasn't going to sell it at $18 or anything like that. So I'm bag holding, and it's coming back, and I've been selling calls against it kind of in lieu of dividends, creating my own kind of synthetic dividends until I get back to my cost basis, and I am pretty close. So nice. I mean, just hang on to it, and I'll be excited to see how earnings go this week.
No, it's been a great conversation, and I will say that you do make sense when you talk about the. For me, it's life, right? Life is one of the big key things, living and having those experiences. So I think dividends are definitely a way to get that reinvestment, that perpetual money rolling, where you can enjoy life and not stress about the market in a way.
Matt, you have succeeded today. You have convinced Bob.
Yeah.
Dividend investing
Converted
is a powerful
him.
thing.
Yeah, I think it's good. I think it's good.
Well done, sir. Well done.
I really enjoyed your book.
Simple Investing.
Simple Investing. Yeah, after I read it, I went through and did all the calculations of what I was getting from my ETFs and stocks, and I was pleasantly surprised. So it was good, and now I kind of have a goal of what to get to for retirement and all that. But it was a great way to look at investing, and a nice way to kind of have it done in a low stress way.
Yeah, buy it, everybody. Moneybyramey.com. Simple investing, the dividend investing strategy. It's great. Matt, it's been a great pleasure having you on. Really appreciate everything, and hope to talk with you down the road.
Hey, thanks, guys. Really appreciate it. Great chat.